Today, we delve into the significant events shaking the global landscape, from a major chip stock sell-off to escalating geopolitical tensions with Iran. We'll also touch on the Federal Reserve's latest decisions and the implications for the economy. Here are today's top 10 stories you need to know. As the U.S. corporate earnings season heats up, key players like Alphabet and Intel are set to report their financial results, which could sway the direction of the AI trade. The outcomes of these reports are highly anticipated by investors, as they will provide insights into the health of the tech sector amidst recent volatility. Additionally, Wall Street's largest banks have reported steady consumer spending and healthy credit quality, suggesting resilience in household finances despite underlying economic uncertainties. This data will be crucial in shaping market expectations and guiding investment strategies. As companies prepare to announce their earnings, the market is bracing for potential surprises that could either bolster or diminish investor confidence. The coming days will be pivotal as these reports are released, and analysts will be keenly observing the implications for future market performance. In recent trade developments, former President Trump has issued revised tariff orders, including a notable 15% tariff on imports from South Korea. This announcement follows a newly announced trade deal between the two nations and has raised concerns over potential consumer price increases. Companies like Procter & Gamble have already warned consumers to expect price hikes on a wide range of products due to the tariffs. The implications of these tariff changes are significant, as they could exacerbate inflationary pressures in the economy. The uncertainty surrounding the overall effects of these tariffs remains a point of contention, as economic analysts debate the potential impact on consumer spending and corporate profitability. As businesses begin to adapt to these changes, the question arises: how will consumers respond to higher prices, and what strategies will companies implement to mitigate the effects? The evolving trade landscape will be closely watched as stakeholders navigate these new challenges. The latest Nonfarm Payrolls report for July has revealed signs of a deteriorating labor market, raising concerns among economists and policymakers alike. This report is particularly significant as it may influence the Federal Reserve's decision-making regarding interest rates. With the labor market showing weakness, the odds of a rate cut in September have increased, creating a complex backdrop for economic policy. The interplay between inflation data and labor market trends will be critical in shaping future monetary policy. As businesses adjust to the changing economic landscape, the implications for consumer spending and overall economic growth will be closely monitored. The upcoming months will be crucial in determining whether the Federal Reserve will take decisive action or remain cautious in its approach. How the labor market evolves in response to these economic pressures will play a vital role in shaping the broader economic narrative moving forward. The ongoing conflict between Iran and the United States has escalated significantly, contributing to heightened macroeconomic uncertainty. This escalation follows a series of provocations, including military confrontations and sanctions, which have strained diplomatic relations. Investors are increasingly cautious as they assess the potential impacts of these geopolitical tensions on corporate earnings and global supply chains. The situation in Iran poses risks not only to regional stability but also to global markets, as fears of disruption ripple through various sectors, particularly energy and technology. Companies are now faced with the challenge of meeting high profit expectations amidst these rising uncertainties, leading to potential adjustments in forecasts and investment strategies. The market is closely monitoring developments in the region, as any significant escalation could have far-reaching implications for international trade and global economic stability. As the conflict continues to unfold, businesses must evaluate their operational strategies to mitigate risk, focusing on resilience and adaptability in an increasingly volatile landscape. Amazon has reported another powerhouse quarter, showcasing its resilience in the e-commerce sector. The company achieved impressive revenue growth, driven by its expanding Prime membership and cloud computing services. However, despite these strong earnings, shares fell as investors weighed cautious guidance from the company. This mixed response highlights the complexities of the current market environment, where even robust performance can lead to volatility. Analysts are now focusing on Amazon's comments regarding future expectations, as these insights will be crucial for determining investor sentiment going forward. The company's ability to navigate challenges while maintaining growth will be under scrutiny, especially as competition intensifies among major retailers and new entrants. With economic conditions continuously evolving and inflation concerns lingering, Amazon's next strategic moves will be pivotal. As it adapts to changing consumer behaviors and market dynamics, how it communicates its plans for the upcoming quarter will significantly influence investor confidence and stock performance in the near term. In a remarkable shift, Apple has overtaken Nvidia to become the world's most valuable company, following a third-quarter revenue report that exceeded estimates by nearly $5 billion. This achievement underscores Apple's robust business model, driven by strong demand for its flagship products like the iPhone and MacBook. Despite facing challenges such as supply chain disruptions and economic uncertainties, the company's shares have edged higher, reflecting investor confidence amidst ongoing market volatility, particularly in the tech sector. Apple's ability to maintain its value in such a turbulent environment speaks volumes about its brand strength and unwavering customer loyalty. Unlike many competitors, Apple has effectively managed to leverage its ecosystem, ensuring consistent revenue streams from services and subscriptions. As the tech industry continues to navigate through uncertainties, Apple's performance serves as a beacon of stability. Looking ahead, investors will be closely monitoring how the company capitalizes on this momentum. Upcoming product launches and innovations, particularly in augmented reality and artificial intelligence, will be crucial in determining its sustained success in the market. Tesla has reported record deliveries for the second quarter, a noteworthy achievement that has bolstered growth hopes for the electric vehicle manufacturer. This impressive performance comes amid significant challenges in the broader tech sector, including supply chain disruptions and rising interest rates. Despite these hurdles, Tesla's results underscore robust demand for its vehicles, reflecting a resilient business model that continues to attract consumers. The company has also launched a new ride-hailing service in San Francisco, utilizing human chauffeurs instead of relying on robotaxis, marking a strategic pivot in its operational approach. This diversification could potentially open lucrative new revenue streams for Tesla, further solidifying its market position against competitors. Investors are closely monitoring how this expansion may influence the company's profitability and long-term growth. As the automotive landscape shifts towards electrification and autonomous driving, Tesla's ability to adapt and innovate will be crucial in maintaining investor confidence. Looking ahead, the company's upcoming product launches and technological advancements will play a vital role in shaping its future trajectory within the ever-evolving. The Federal Reserve made headlines this week by keeping interest rates unchanged, a decision that reflects a cautious approach amid mixed economic signals. However, the meeting was not without controversy, as two Fed voters dissented from the decision, indicating internal disagreement on the committee. Fed Chair Powell emphasized that rate hikes could be on the table if inflation remains unchecked, a stance that has left investors feeling uneasy. The Fed's preferred inflation gauge came in hotter than expected, raising concerns about rising prices in the economy. This uncertainty is prompting money market funds to adopt a more cautious stance, as the potential for future rate hikes looms large. The broader implications for the economy are significant. As interest rates remain a key focus, many are left wondering how this will impact consumer spending and business investments. The Fed's next steps will be critical in shaping the economic landscape. Will they maintain their current policy, or is a shift in strategy on the horizon? The upcoming economic data will likely play a crucial role in influencing their decisions. In a significant development for the entertainment sector, Netflix has reported disappointing earnings that have sent shockwaves through the tech industry. The company's weak forward guidance has raised serious questions about the sustainability of its growth in an increasingly competitive market. This quarter's earnings reveal a slowdown in subscriber growth, which is particularly alarming given the rising competition from platforms like Disney Plus, Hulu, and Amazon Prime Video. Following this announcement, Netflix's stock took a substantial hit, contributing to the broader tech sell-off alongside the already struggling chip sector. Investors are now grappling with the implications of these earnings on future profitability, as Netflix's once dominant position in streaming faces new challenges. With economic uncertainty looming, the market sentiment has turned cautious, compelling many to reassess their positions in tech stocks. The concern is that high profit expectations may not be met, especially as geopolitical tensions, including the Iran conflict, continue to add pressure on global markets. As Netflix navigates its challenges, the question remains, can the company regain investor confidence and adapt to the changing landscape? The upcoming quarters will be critical in determining its ability to innovate and attract subscribers in an ever-evolving digital environment. The tech sector faced a significant downturn as chip stocks tumbled, marking a dramatic shift in the market landscape. This sell-off has erased an astonishing 105% of the AI-driven gains accumulated earlier this year, pushing the sector firmly into bear market territory. Investors were taken aback as U.S. stock index futures plummeted sharply, reflecting growing concerns over the sustainability of the AI trade. The recent weak earnings forecast from Netflix further amplified negative sentiment, prompting investors to reassess their positions in the tech sector. Historically, chip manufacturers have been at the forefront of technological innovation, driving growth in various industries. However, supply chain disruptions and rising production costs have raised questions about their profitability. The implications of this downturn are profound, as many had expected a prolonged rally fueled by advancements in artificial intelligence. Now, uncertainty looms large, casting doubt on corporate earnings potential amid broader economic challenges, including inflation and interest rate hikes. This sell-off has prompted analysts to call for a reevaluation of investment strategies, particularly in technology stocks. As the market grapples with these significant shifts, upcoming earnings reports and economic indicators will be critical. Investors will need to closely monitor these developments to determine whether the tech sector can stabilize and recover, or if a deeper correction is inevitable. Thank you for watching today's top stories. Which news item surprised you the most? Let us know in the comments below, and don't forget to like and subscribe for more updates.